Good morning. This is the chart of the week. And today I look at the Singapore index. Singapore is a highly open trade dependent economy. And if we're going to see any stress to the world, we would see it developing at least to some degree first in Singapore, before in the Singapore index, before we see it spreading to the rest of the world. And back in April, I was talking about how it would be very strange to see that the Nasdaq had topped in December, and then we had seen the Singapore index moving higher, and suggested that this hence would be a proof that this Nasdaq had only been going through a correction, and that has seemed to be correct. Now we seem to be getting closer now to technically a top here in the Singapore index. We're not really there yet, and it can still develop for a month or 2 months. But this is an indication that we are now closing in on what I think, from a technical perspective, is a top. It may be here around 470 or 480 or something like that. And so it can last another month or two, but we should be paying a lot of attention to the Singapore index here in terms of a potential top in the stock market. And if you look to the Dow Jones, actually, it seems like that is also suggesting the same. We see how we've been moving up extremely strongly since the bottom here in March of 2020. And we are now up 150% in that time frame. That is just unprecedented. And we see that's moving into what's called a rising wedge, which has a topping target around 49,800 or maybe even to 53,400. We observe the bearish divergence here, which is not what we want to see. If we look into what we've seen in history, also these divergences tells us that the weakness is actually creeping into the market. So things are developing in a way where we are in a topping process. And I think this is what is difficult for people to understand. When I say we're going to see a bear market, we're going to see a recession, and they say, why, Henrik, you've said that it's going to come, but it's not coming yet. And I'm also there. I mean, I can still see months worth of rally before we get there. And we can also go back in time and look at the Dow Jones Industrial Average here and see how we have had, rallies into a top, and then it took longer for it to develop. I don't think we're in a 1998 scenario. I think we saw here as well in 2007 how we moved up at like 30% ever since we had a larger decline also in the market, and the same here. But it was really until the moment when we saw short-term yields starting to decline that we got into the top. We are beginning to see that. And I want to say we're beginning to see that. So we're not really seeing it unfold just yet. And the market is now up around 24, 25% since that dip we saw in April. And I think this is the final push. It can go 30%, it can go 34%, it can go 54%. If I have to guess, I think we're probably going to one of these lines here in terms of the top. So indications are there that a top is coming. That's not the same as saying it's here right now. And I'm still bullish into this phase. But if I'm told that this is the beginning of a new 5-year bull or something like that, then I'll say that there is no evidence of that whatsoever, and that we are in the very final phase when the central bank starts to discover that the weakness is coming into the economy and the markets are going to roll over. So this is the view from my side here based on the Singapore index, the Dow Jones, but also understanding that things are not rolling over right here and right now, and we could actually see a rather powerful move into the final high. That's all for today, and I'll be back next time.